I'm Matthew Previte. I'm a CPA here in Massachusetts. Since 1990, my firm has represented taxpayers before the IRS, the Mass Department of Revenue, and other state tax agencies. We are a small tax resolution firm that offers very personal service. I'd like to talk about how to file a return if you don't have all your information. One of the most common problems that I have is people come to meet with me and they don't have all their information. For instance, they've lost their W-2s or their 1099s if they're a subcontractor. They don't have their bank statements and canceled checks if they're a business. And so they come to me, they have a tax problem, and typically, they have assessments on the books with the IRS or the state where the government did substitute returns, meaning the government assessed taxes based upon what they had on file. And so the client comes to me to resolve the problem, and I say, okay, we should file original returns to correct the substitute returns because it's probably going to lower the tax, and it's also going to avail you of other rights, like the potential to file bankruptcy down the road to discharge the taxes, but they don't have information. And so, I talk to them about what we need to do to try to piece together information, or enough information to file a reasonably adequate return. One of the things that you can do, and probably the easiest thing, is when a client hires us, we file a power of attorney with the IRS and we request income transcripts. So for instance, a client comes to us and says, geez, I haven't filed much in the last 10 years, but I'm not sure which years. Well, we'll file a power of attorney and we'll call a particular unit that is there just to get information to practitioners, and we'll find out what years you file, what years you haven't filed. We'll find out for any of the years that you have or that you haven't filed, has the government filed a substitute return for you? We'll also get income data, so we'll get copies of W-2 information and 1099 information. That could be 1099s miscellaneous for subcontractors, or for interest or dividends, or the sale of stock, or distributions from a 401k. The one bad thing about income data from the IRS is it doesn't have state withholding data. However, oftentimes there are ways around that, and we still can get 95% of what we need from the IRS. One of the other ways to get information is typically your employer. Most employers will use an outside payroll service, like Paychex is who I use. And by going to the payroll company, we can get copies of the original W-2s that show the state withholding data that the IRS doesn't have. So sometimes contacting your employer's outside payroll service, or if you no longer work there, we find out from the employer who did you use and we contact them, we can get that information. Also, employer payroll departments oftentimes have records going back several years or more. One of the other things that we have to deal with from time to time is clients, let's say, that have a business, and the information that we need is, let's say, 6 years old, and it's bank statements and canceled checks. Typically, most banks won't keep information on their customers' accounts for more than 3 or 4 years. I think maximum like 5. So what do you do in that case? Well, if it's early enough to order bank statements and canceled checks, I tell clients do that, because it's always better to have all the detail if we need to do some accounting for a business to do their corporate return or whatnot. But if we can't get bank statements, then the other possibility is using different forensic methods to try to reconstruct what that person's business income was. So for instance, if I know it costs you $20,000 a year to live, and I know that your business expenses, let's say we do have canceled checks, but we don't have bank statements. If I know your expenses for your business are $80,000, then I know you had to at least gross $100,000 for your business to net, $20,000 to be able to pay your living expenses. So that sometimes is a way to reconstruct your business income. The other thing is using business ratios. There are companies out there that have books that are based upon millions of tax returns filed with the IRS, that basically show, for instance, for this type of industry or that industry, what they do is the following. For instance, let's say it's a landscaper. For a landscaper, they will say, okay, a landscaper is grossing between 0 and 250,000. Their cost of goods sold was 60% on average of the gross revenue. Or if it was more than $250,000, but up to $500,000, their cost of goods sold was 63%. So by using these statistical ratio books, sometimes with just little bits and pieces of information, we are able to kind of reconstruct the client's information in a reasonable way to file a reasonably accurate return, something that would be acceptable to the IRS. So if you don't have records, there are ways to deal with it, and some of the information we can get from third parties, some of it we have to sometimes reconstruct. So basically, oftentimes clients have to file returns that are imperfect, but they're reasonable. And that's, the way it is. The IRS typically would do the same thing. If they don't have all the information, they're going to do it based upon the best known information. So what we would do is try to reconstruct or gather enough information to file reasonably accurate yet imperfect returns to start the collection process and then to resolve the debt issue. One of the issues with tax returns, it's always better to file an original return. Otherwise, if the government does a substitute return, typically it's going to be inflated. It's going to be a lot more tax than you really owe. The other question we get often is, as it relates to unfiled returns, how far back to file. And this is a common problem I see all the time with practitioners that don't practice in this area. A client will come to me that has a CPA, and that CPA prepared 10 years worth of tax returns and filed them all. And I determined he didn't need to file all those. For instance, if the IRS typically hasn't assessed anything, they haven't done any substitute assessments, then typically you go back 6 years. And that's all the IRS is looking for based upon their internal rules and procedures. Now, there are exceptions to when you want to file more than 6 years, and I won't get into that here. But generally, you want to file 6 years worth of returns with the IRS, unless there's an exception. One of those exceptions, briefly, is if an 8-year-old tax return year was assessed a substitute return, it may make sense to file an original return to correct that because it's going to lower the tax. But that's not always the case. It depends upon a number of things, including what your ultimate resolution plan is going to be as to whether or not you file more than 6 years. So keep that in mind. The other issue is refunds. Oftentimes, people basically miss the deadline to file for a refund, which is generally 3 years. Preparing returns is important in the sense that if you don't prepare a return and it's more than 3 years old, you lose that refund. So for instance, if let's say you had a $1,000 refund and it was for a tax year that was 4 years old, then generally by filing that return you're not going to get that money back. So filing returns timely, or at least within 3 years of the due date, is important so that you can get those refunds. One of the other issues with a refund, the refund statute, is it's 3 years from the due date of the return, including extensions, or 2 years from the date the money was paid. So let's say, for example, as of today, you have a tax assessment and it was filed late, and it goes back 6 years, but it was filed a couple of years ago. And you just start paying towards that debt now. So the taxes from a year 6 years ago, but you just started paying the money now. Let's say they were levying your bank account and applying all these levies. Essentially, if you determine that that return or substitute assessment is incorrect and file an original return, even though it's more than 3 years back, because the money was paid within 2 years, you can file an amended return or a claim for refund and get that money back. So filing returns is very important as far as how you get the data if you don't have it, filing them timely, how far back do you file, and so forth. Please give us a call to answer any of your questions, and if you'd like to set up a free consultation, you'll get to meet with me or talk with me over the phone, whichever you prefer, and we'll go over your situation, discuss your problem, what options are available to you, and give you some information to think about in making your choice for a tax firm. Call us at the number above.